So you want to say anything? No? Then why you don't want to sleep? Okay, it started. Alibaba, I bought the call 2 years ago and then I let it exercise. And then right now, I'm still holding Alibaba shares right now. This is the earnings report. There's a few key things right here. First is AI, second is quick commerce. These are the two business segments that they put in more investment. In the report itself, right, you know that their revenue growth is slow. This is the things that they cannot avoid because they are so huge. They have like 150 billion revenue per year just by doing e-commerce. So right now, if you just look at top level, top line, right, it's very, very heavily driven or big portion is by the e-commerce side. And what make it worse is like this year, their profitability went very badly because of all this investment that they put in. If I'm not wrong, the number is like their profit numbers dropped by 70%. So they have already divested their Standard and In Time. So if you removing the divested company, right, actually their own business segment have grown by 9%. They didn't share quick commerce profitability, but they share quick commerce revenue numbers grow by more than 50%, if not 60%. All right, so what is quick commerce is anything that is delivered within 1 hour. Their AI business right now is growing pretty well in 𝐿𝐴. They're also growing in 𝐽𝐿. And what's better than that is they have this platform. It's like a distribution channel for people to make use of their AI tool. So imagine the people who run commerce, right? They need to run Taobao shop, right? And in their Taobao shop have all these AI tools available to them. Just like right now, a lot of offices in Singapore, big part of Singapore economy is office worker. And all the office workers are using Microsoft. That's why government pushing a lot in Copilot subscription. So it's like distribution channels allow them to distribute their product effectively. Maybe I just write in 𝐷𝐾𝐨𝐫. You just take it at Watson. So Watsons, they have been selling all these different brands. So in order for them to grow another brand, for example, their own house brand, right? It's very simple. They just ask a company, commission a company to create their own Watsons tissue paper. Then this Watsons tissue paper, right? They have a natural distribution channel, which is their Watsons own store. So they can just immediately distribute new product to their store. So one day can be tissue paper, the other day can be alcohol wet wipes, one more day can be their own lip gloss. All right, so this is what Alibaba able to do. They can easily distribute their AI tools. So this translate into triple-digit growth in their AI-related product revenue. Like-for-like revenue grow by 9%. Income for operation dropped by 74%. Income for operation is the so-called gross profits. If you're running a business, right, you grow your revenue tremendously, right, but if income is like suffering, then the next question is how long will it suffer? And why it suffer so badly? So you see, so our revenue 2%, but income dropped by 74% in these 3 months. In terms of 9 months number, it dropped by 55%. Of course, they spend money in developing their own AI infrastructure. So they developed this thing called Alibaba Token Hub. It's a B2B model for their AI business. I don't have the actual number, but let's go to the second pointer, which is quick commerce selling. Yeah, I think this is just to address like the Pinduoduo guys. This ELE.me is 𝐿𝐵. It's something like the Food Panda, something like GrabFood. So-called drivers, right? They can send foods. They can also send like supplies. In other words, they give out a lot of vouchers, delivery vouchers or free delivery. That's why there's a high acquisition cost. There's a high acquisition cost means a lot of vouchers, a lot of freebies that being dished out just to get new user. Where is this new user come from? It can be from Meituan, it can be from Pinduoduo. And then they also have this loyalty program that increase like double-digit growth. So first 150 million new active user, and then 59 million loyalty retention in terms of like revenues, and then this is the future growth. So if you are running this business, right, 150 million new user, how much revenue you hope the new user can contribute to the company? So 150 million, if I'm not wrong, China's population is like how many B? Close to 1 B. So 150 million new buyer is like 10% of their population. Still okay. So all in all, the CFO have mentioned that this is the peak of investment cycle already, so they will not be increasing more investment. And then the growth engines have already achieved the unit economy, means they have achieved like more new user and more revenue. And then he just say that the disposal of like the business have also leave the revenue gap in a sense that the revenue being removed, income being removed. That's why you see a big drop in their income. Let's look at AI side. So this is not the software layer. This is more on the infrastructure layer. They are playing a platform as a service, the infrastructure layer for, especially in China. So they have 𝐿𝐴 for B2C, and then they have 𝐽𝐿 for 2B. And then they have their own cloud computing, and they produce their own chip. So in other words, they build very close to end-to-end service. For a player like Amazon, right, they only provide platform, cloud computing, but they don't provide models. So the Google is the closest party that do close to end-to-end. So if you ask me, right, these segments that Alibaba is building, right, it's not so much like Amazon, it's closer to Google without Google Suite's product. For example, the Google Sheet lah, not like the software type lah. So 𝐿𝐭, their B2B AI agents, just launched on March 17th. And right now, if you're looking at qianwen, right, there's already 300 million. If we just assume all are in China, close to 20% of population. Next, they also have their Tensor chip. I don't know much about this chip product yet. I just know that they can provide end-to-end right now. Their revenue number is at close to 36%. Like I shared earlier, they have a natural distribution, means all their app can just distribute straight away. And the number, instead of taking 36, we just take 35. So they have like 40% market share. And then another numbers, which is the income drop down, their free cash flow also drop down. And in actual fact, their free cash flow go into negative. So all in all, this is the top line number. So you see, this is 3 months, this is 9 months, but the trend is the percentage roughly the same. So you see Alibaba e-commerce removing the Sun Art, right, is 6%. And then if you look at the Alibaba International Commerce, right, it just go by 4%. So all in all, like it's still in the double digit-ish number, but the consolidated number, right, is just single digit. So one of the things that Alibaba face is like their China e-commerce, they could not grow further really. It's like close to stagnant in the sense that at most high single digit. That's why they need another segment that can grow fast enough, which is the cloud intelligence. And cloud intelligence right now it's already crossed the 100 billion renminbi. And then can it be bigger than 400 billion e-commerce? E-commerce, they can only serve like retails, they can only serve manufacturing, but cloud, they can serve different industry. Alibaba, in terms of e-commerce segment, right, they started since 1999. So right now is 2026, is close to 30 years already. So they are the market dominant, they have grown 30 years in e-commerce. So from 400 billion business, for them to grow to 800 billion, which is double, is very tough compared to cloud business, 100 billion to 200 billion by the sheer number. So this is the first thing. And the second thing is by the so-called business facing. So commerce, really pure commerce, but right now cloud, you can go into each industry from like shipping or from constructions, educations, all the industry you can provide cloud services or cloud segment when we so-called looking at Alibaba, right? So this is the potential growth area that we look at. But the problem is, even though how fast 33% it grow, right? The total revenue number still in single digit. Tough part. Yeah, tough part. How should cloud intelligence grow so that this number can grow to double digit? So if revenue grow to double digit, right, their relative valuations then can only go up. Yeah, AI business or cloud intelligence business is just starting. And if you look at people around, right, the adoption is not there yet. At this moment, right, I think better not spin off or better don't do anything, let it grow within the organization. Of course, because I'm an Alibaba investor. Second thing is like, 𝐼𝐻𝐽，the Ant Financial, when there's a lot of news that they want to spin off, at the same time, the Ma Yun also said something, and then in the end, right, it just caused a lot of trouble to Alibaba lah. So if you ask me, right, I would say, better don't do anything lah. Just focus on building the business. Let it grow within the entity. It's just a matter of numbers calculation, whereby they spin off, you still own Alibaba, and then you own cloud, and then people can just buy pure cloud. But because I'm biased, I'm already an investor, I will not suggest this action at this day lah. Unless they say cloud already cannot grow already, then spin off. Okay, because like no change ma. If not, right, let's keep it focused and grow the cloud business. So this is what I think, right? So right now it's 116 billion, right? If they continue to grow at 35%, how long it takes to surpass the e-commerce group? So I run the numbers. So it's like 4 to 5 years, right? So if 4 to 5 years, it can grow 30%, right? And this e-commerce doesn't grow, right? In other words, this is become 50% of business lah. Means they can go back to double-digit growth, even like more than 15 and high double-digit growth. So let's say this is growing at 0, this is growing at 33%, the proportion is 50%, 50%, right? Then you grow into teens, which is like divide by 2 lah, 15%. So I think this is a very, very crucial number for them to have a higher price to sales valuation. means the analysts re-rate them so that the valuations will go higher. And then I do believe there's a need for it. If you look at like just ChatGPT alone or like Anthropic alone, economic growth is heavily reliant on population growth. When the populations grow, that's when your economic value, your creations, that's where it bring the so-called economic upwards. When our population went down, right, how can we compensate that? So in their session, they said that that's why AI come to place to compensate the slow of population growth, but increase of productivity growth. So that's why all the countries are doing their best to address this. So it will not be double killed in a sense that your productivity went down, your population went down, then it will be very, very bad for the country economy. I would say it will not happen overnight. It will happen gradually. That's why I see this is directions for Alibaba to grow. Just to repeat, the ecosystem integration, which is the end, so-called the close to end-to-end service, AI service provider, from their model to their chip and to their data service. And next is their financial resilience. They are investing a lot. That's why their income got hit. Can later on, after the investments have been in place, can their income back to their trajectory. Alibaba right now, their price to sales is at 2 times. Their growth rate is also at 2%. The market sentiment still pack comparison of Alibaba to Amazon. The analysts, when they talk about Alibaba, right, they most of the time compare to Amazon. So if that's the case, let's compare the valuations with Amazon. So Amazon right now, their price to sales valuations is close to 3 times, and their revenue CAGR is like in the 11 to 13%. Let's say Alibaba, first thing, their revenue after a few years can go up to 11 to 13%. Then their price to sales revenue, their valuations can go to 3 times. Revenue grew up, their sales grew up, your share price will go up. So first thing. Second thing, when the re-rating happen, right, you grow from 2 times to 3 times. Means your share price can easily 50%. So first thing, the revenue of cloud must happen. Second is when it surpassed the e-commerce, and then that's when it went into double digit. So when it went to double digit, right, the third thing will happen, which is the re-rating. And that's when you can see it can be on par on Amazon, which is from 2 times multiple to 3 times multiple. So right now, Baba is around 122 times. If you like to be as conservative at 1.6 multiple, right, then the share price should be around 100. Is it catching falling knife, or you like to wait it rebound? You can take your stand, because I also don't know, will they stop at 75 and will they just go to 40 or $30? This one I also don't know. But when it go down to $30, right, their multiple is at 1.3 times. Yeah, but I see like multiple of 1 point or maybe 2 is quite enticing already. And not forgetting their growth rate is close to 20th to 30%. I asked whether you guys order get hit. Actually, I placed 80 right here and I order got hit already. So am I catching falling knife? If it doesn't rebound and keep going down, then it's falling knife lah. I hope by sharing all this, right, you can see what is my line of thought. And then I thought some of you guys are even better investor than me. So this is something like just come in and support me kind of thing. So once again, thanks for supporting me. And then I will see you when I see you. Bye bye.